Good afternoon, Alex Cole. Welcome to May 28th and a little Go No Go research flight path review. How are you today?
We made it to the end of another week.
Made it to the end of another week and frankly, the end of another month. We've got monthly closing prices here in the US. We've got a holiday on Monday, Memorial Day, remembering all of those that have fallen. But let's take a look first before we get into the research that was published Monday morning. Let's take a look at where we're at on a month-end basis with some of the U.S. indices. Why don't we pull up the S&P just to get started?
You've got it, sir. So here you go. Let me know if you can see the screen.
There we go. Perfect.
Okay, so here we've got the S&P on a weekly. Strong, uninterrupted go trend. Price being supported by momentum, as you see the Go No Go oscillator since coming out the middle of last year. Since then, hitting the zero line, finding support, being in positive territory since. Actually, just turned up again on the weekly with heavy volume. So the weekly chart looking good. If we drill that down into a daily, then we can see that even on the daily, we had that volatility over the last couple of weeks. Was it enough of a shakeout? It looks as if some people thought so. Even the oscillator has now got back to zero, rode to zero, and then strongly popped back into positive territory to end the week. So, we're not, like you like to say, you like to see it when new highs, there's nothing overhead, no overhead supply to cause resistance. We're not quite there. We're sort of at those highs from a couple of weeks ago. So we'll have to just make sure that we can get above those and consolidate. But, fairly strong week for the equity, for the S&P, for the broad market as a whole.
Certainly. And that very long-term trend, you're looking at the weekly basis, still very much intact. Though trending on an aqua bar, signaling that there's just a little more weakness in the overall trend coming off that post-COVID crash. If we switched out from the S&P, sort of the large cap equity index, let's take a look at the Russell, the IWM, just to see what our small cap friends are doing.
As we sort of knew and we discussed verbatim over the sort of the last months, the small caps really powered through last year and outperformed, and they've sort of fallen off and underperformed over the last few months. And you can see that on the weekly. There's been a longer consolidation than that we saw on the S&P as a whole, and it's been sideways really for many weeks now. And you can see the Go No Go oscillator riding the zero line. So we're expecting, if this trend is healthy, then this should become support. And any move off the zero line for the oscillator would show bullish momentum. And you'd expect then an attack on these highs. So if you drill down, so the trend in place, but consolidating sideways. So if we
would you mind maximizing the chart view right there? Love the screener on the right, but there we go. Perfect.
Yeah.
Just a little more detail. Yeah, that's great.
Yeah. So we've had this, that's a lot of weeks now, really. We've got about 3 months of sideways movement on the small cap. And we saw that rotation out of the small cap and back to sort of a more value play. But let's see, we've got support there definitely at the oscillator being on the zero line. So if we drill down then into the daily, it shows that we've sort of had that choppiness, but most recently now back into a couple of blue bars, even though they're aqua. Oscillator above zero as well. So looking better. Obviously, it's tried to do that a few times before, but looking better. And hopefully this time around, we can push back up to these highs.
Absolutely. Yep. That is a range-bound market over these last 3 months, and certainly frustrating to a lot of trend-following investors. But we're looking at that third knock on the door and see if we can finally break through. Let's switch it up off the small caps. Let's take a look at the tech heavy Nasdaq 100, the Qs. And obviously, on a longer term weekly basis, we're going to see how that trend just really powered through the post-COVID rally. And similar to the small caps, we've had that rotation out of growthier names into cyclical sectors, the industrial economy coming back online. How has the Nasdaq fared?
Yeah, there's a lot of interesting things on here because we saw that the tech stocks powering through last year, but then that rotation away into financials and into more of the value stocks this year. We can see right away that there's been divergence from momentum and price. So price sort of trying to go higher. Maybe that's the same sort of high, but slightly higher lows, but definitely lower highs below in the oscillator panel. So that's what we've been seeing over this last couple of months of rotation away from tech stocks. But again, at the zero line, still in a go trend. Actually, the last week's bar was a bright blue of the stronger trend. So if we can find support here, again, much like the long-term view of IWM, they kind of match well together. Some choppiness over the last few months, but on the longer time frames, managing to hold the trend. And then if we go into the daily, we'll see, very much like what we saw with IWM. We've seen a range-bound market. We've seen some corrections that were enough to actually push the go-no-go trend into a no-go as it corrected sideways, but wasn't enough to go against that longer-term trend. So really these opportunities to get back in on the side of the trend, you're looking again now to see if we can get back into the blue go bars. Momentum's positive. We can see these lows rising as well as slightly higher highs here. So higher highs, higher lows. If we go into a go trend here, you see how much higher it is than the last time. Maybe that's enough to propel price to a new high again. Definitely a bit more of a struggle, a bit more of swinging from sort of, chopping markets than we saw in the SPY, but starting to pick up, I think. And I think you're seeing a bit of participation across the board in equities this week.
At the very minimum, we're seeing all of the signs of a return to the top of that range, and we'll be watching to see, where the oscillator's at. Is there strong enough momentum to help propel the Qs into new all-time highs?
Absolutely, yeah. I mean, we saw earlier on the chart. This is on here from when we talked about this before. But the higher highs here and the lower highs on the oscillator, showing that this was a bit of a bearish sign for the QQQ. And then we had that longer term correction. We saw the same thing here, higher high, and then lower highs in the oscillator. And then the correction was a little bit longer. So what we want to see, now going forward is if this does become in a go trend, we'll look towards the oscillator to see if it confirms this time around.
Excellent. Technical Analysis 101 with Go No Go Research. I like it. Let's jump into a few of the elements that went out to Go No Go Research subscribers on Monday morning pre-market, starting with the asset class heat map, just to give everybody a sense of sort of where we're at risk on wise with broader global markets across asset classes.
For want of sounding like a broken record, many of the themes remain. There are some things to note here that have been, maybe shaking things up a little bit, particularly the treasury panel, the second panel there. We've seen strength in equities again this week. So that top panel, it shows the bright blue go bars. And often you expect then treasury bond prices to be moving, against what you're seeing in equities. But we've seen a sort of an attempt to go to a go trend a few weeks ago, then a lot of amber, now another couple of pale aqua bars. So interesting to see why people are moving money into treasuries, right? Is that some sort of, protectional activity? But commodities also very strong, had a strong week. And maybe that's all being driven by the weakness in the dollar, right? Dollar continues to struggle, although a little bit more of a weak no-go this week. And of course, in the last panel, we saw that real rollover in cryptocurrencies, and now Bitcoin and the other cryptos are sort of going sideways after really falling hard in that range. We talked about it, I think last week, that range between really those round numbers, 30,000, 40,000. Somewhere in there is where we're going to stay until we can sort of cleanly break through one of those levels.
Absolutely. Certainly interesting to see in the treasury panel just how the reaction to this inflation scare is really playing out. And as we wrote about in Go No Go Research, it's as Walt Diemer said, you got to watch their feet, not their mouths. that inflation narrative seems to have not quite played out. At least the bond market is telling us that they're not anticipating any runaway inflation quite yet. So thank you for that, Alex. Let's dive into those equities that are in that strong go trend. And let's take a look at leaders and laggards as far as the relative performance of the sectors of the S&P 500 are doing. Talk to us a little bit about what's going on in this go, no go rel map.
So as a reminder, as everybody should know, hopefully by now, the rel map is taking the go, no go trend and applying it to the relative strength ratio of each sector to the base. So a pure go, no go map of the sectors may show all the sectors doing well right now, right, Tyler? Equities are doing well as a whole. But
Absolutely.
where is that outperformance coming from? That's what you want to look for if you're doing any kind of tactical allocation or portfolio management. And so we can still see clearly that most of the alpha has come from, over the last several weeks, those industrial sectors, those sectors that are well positioned to do well with a reopening economy. We've got materials in the top panel still in a go trend, albeit relatively right to the base, albeit a little bit weaker. We're still looking at energy in a go trend. We're looking at financials in a go trend, industrials in a go trend. What we are seeing what would be bringing your portfolio down if you were too overweight in some of these sectors are still technology. Technology is still underperforming the market. Utilities underperforming the market, as well as discretionary as well. So all of that, other than the technology is the one that's really fallen off, but the other sectors that are leading and lagging really come from the idea of an industrial economy coming back around. But there's perhaps some fear from the retail investor. And if you look at discretionary and things like that, not quite taking off.
Yeah. For anybody who's looking for a good follow on Twitter, I can't recommend our friend JC Peretz highly enough. You'll find him at All Star Charts. But in a recent conference call, he was talking about, and he really believes in the keep it simple, stupid method. He said, so there's the stuff in the ground. There's the people who pull the stuff out of the ground and send it to the factories to make more stuff. And then there's the folks who finance all of that digging and using and selling. It's like banks, energy, industrials. Couldn't be simpler. And it's certainly for me, seeing the healthcare and the consumer staples falling out of the relative trend. We're seeing the amber neutral readings there change through the week, and those defensive sectors kind of pulling back a bit. Utilities on the very bottom in a strong no-go on a relative basis, I think is a healthy sign that we're just in year 2 of a bull market and things rotate. Yeah,
I mean, there's some contradictions there. You expect in a, when you've got the defensive sectors, staples, utilities doing not so well, you expect the growth sectors to be doing well, like technology. But technology is it's had its own run, really, because it was such a driver in this strange economy we had last year where, that stay-at-home play, it was such a strong driver, and now that's cooled off and come back. But it couldn't agree with JC more in terms of the other things that are going on. That's what you're seeing across the board there, really.
Yeah. So let's dive into just a couple of these sector groups and look at some specific names. But just starting with the healthcare sector, the XLV, obviously dropped into a neutral amber reading, but we were seeing some signs, not just on the relative basis, but on an absolute basis for potential breakout and a go trend higher. What is the chart telling you today, Alex?
Well, we were talking, potential breakout in whichever way it goes, right? That's the beauty of technical analysis. A lot of people say, well, how can you predict the markets? Well, technicians often will argue that you react to the markets.
Correct.
You don't predict the markets. And so we talked about this channel that the healthcare sector was in, and it was at the top bound, and it might provide resistance, but it might be a breakout. And we saw it get up here and then come back and close, right within. If we zoom in a little bit, we can really get a sense of what we're talking about. It tried, but the close on both of these days was actually back within the channel. and then we are now back in the channel completely. And on the bottom, we're seeing bearish divergence. So, eventually it could break down, and we'll react to that, because we'll see it break down. We'll see the oscillator break down into negative territory, not find support. But right now we're still in a go trend, and we're still watching to see if the oscillator once again finds support here. And if it does, it'll be for finding support with the price a little bit higher. That's always interesting to me. After failed divergence, if you see divergence like this and it doesn't break down, and then you get support from momentum at a place where price is higher, that's often quite encouraging, because you're getting that momentum come back in with price has a lot less to do than it did when it was at the lows, if that makes sense.
It does. Absolutely. Yep. You're adding momentum when you're already in sixth gear.
Yeah, instead of finding that divergence down here and riding the zero line when we're at the bottom of this channel, now we're at the zero line, but we're much higher. So if it was able to find support there, I would think that could be encouraging. But again, you react to what the market does.
Absolutely. In the CMT Association's monthly podcast series, Fill the Gap, we interviewed Ralph Akampura this month. So that's coming out in a couple of weeks. And he talks about we talked a lot about his book, The Fourth Mega Market, as he was writing in the 90s about how nations tend to invest huge portions of their GDP to win a war. And that then you get into peacetime, and the major bull markets, the secular rising bull markets of the day, tend to happen in peacetime right after a war. And when you think about it from a macroeconomic standpoint, all of that investment in technologies to help win the war then becomes commercialized after the fact. Well, the whole world went to war, not against each other necessarily, but against a virus, and a ton of investment by countries around the world, huge portions of their GDP to help figure out mRNA technology, vaccines, treatments, medical devices. So there's just a lot that's been invested in the healthcare space that we're not talking about this playing out on daily and weekly charts, but over years, as this technology then becomes commercialized, this is going to be a really interesting space to watch in terms of the next big technological advances. So let's dive into a couple of companies that are certainly already showing some signs of participating in that technological advance. Let's look at Align Technology. It's a medical device company, and the creators of Invisalign. So having nothing to do with COVID, but perhaps if you have crooked teeth like I do. Alex is a Welshman, so he's not even allowed to comment on crooked teeth. What are you seeing on the Align Technology chart here, Alex?
You just deal with what you're born with, where I'm from.
Just deal with what you're born with. That's right.
Yeah, so this was one we talked about at the beginning of the week because we were seeing some signs, bullish divergence, going to go oscillator, making higher lows, price making a lower low here, trying to get into a go trend, experiencing some difficulties. And then we really liked the look of this support line that we were noting might become resistance, and we were going to look to see what happens as it hit this line. So that concept of polarity we've talked about, so many times on our calls, in our newsletters, and it was support here. It became resistance. We're looking again to see if it becomes resistance. It was actually able to break through, and we were right about here saying, okay, let's see what happens at this zero line. Oscillator was able to break into positive territory, and now we actually think we're seeing some support being found at this key level, where the players in the market really going back and forth, sort of a tug of war, whether this is valuable to buy or a good time to sell. And if we can consolidate above this level, then it looks as if we find support here. Oscillator coming back to retest the zero line. If it stays above zero, we may see this turn into a strong blue go trend, test these prior highs. I think in the newsletter we were saying if all of this played out, we'd be looking to test these prior highs at around 650. So this is in play. So this is definitely one to watch.
It seems very encouraging that Friday's close managed to stay at that support line. Certainly an important retest after breaking out, but still in trend and still above that support line. So that's great to see. You were also looking at it on a weekly basis, right? If we zoom out just a little bit to see sort of what prior momentum conditions we were in.
Yeah, this is the weekly again. It's sort of trying to take advantage. A lot of people will look for, how can you? It's all about entry points, right? At so many levels, and you may well be wrong, but you can always get out, right? It's that non-emotional idea that you have to have your checklist, you have to follow your rules, and you may be wrong, and if you are wrong, you get out. But in this case, the weekly trend is in place. The oscillator is finding support at the 0 line, and if we see go opportunities on the daily, then this is a good time to take advantage of those opportunities, because the fact that momentum is at 0 means that the price on a longer term time frame has actually been taking a bit of a pause and taking a breath. So if we start to see go criteria being met on the daily, then it could be an entry point that plays out well as then the weekly continues to rally and gets off the 0 line. So could be wrong. The daily could roll over, the weekly could roll over, and that's when you know that it didn't work out. But nice to see the support here and looking for opportunities on the daily.
I'd certainly much rather get in position for something to continue in the direction of the trend that was prevailing over the longer term. And so we're always dealing in probabilities. The market is a very uncertain place. Nobody can tell you the future, but in terms of a risk reward, you know very quickly if you're wrong. And the whole idea about trend following is take a lot of small bets and cut your losses short, and you live to trade another day. But catching something that's returning to what was a stronger prevailing underlying trend just makes a lot of sense. Thanks for that, Alex. So let's switch gears, and we'll talk a little bit about the sludge beneath the ground that we keep drilling into and pulling out and powering our factories and sending families on road trips and summer vacations. Certainly the seasonality for oil in particular, the energy sector, is in its favor. But if we dive into the XLE, why don't we first look at it on a weekly basis? We'll start with the longer term, and then we'll drill down. Pun intended.
Oh, that was good. So this is what we were dealing with on Monday. We're noticing this trend channel, or not really trend channel of congestion. Lots of activity, lots of buyers and sellers at this level, coming from back here, really, where there was some support before it rolled over completely last spring. So we've come up to that level once, and we've fallen away. We've come up to that level again, and we've fallen away. So we want to see if this time we fall away, can we set another higher low, right? And will that mean that we stay above 0 on the oscillator? But there's definitely some sellers in here, right? Clear as day.
Clear as day. Yep. And so then if we drill into that daily time frame, and we're seeing more detail on the pullback and resurgence.
Yeah.
Wow. And there's the oscillator right at 0.
What we were watching here, we were watching this at the beginning of the week and seeing what would happen. Well, we had a bit of a I guess scare.
Kind of a flat week. Yeah.
It went flat and it dipped below, came back to 0. So we're really sort of nowhere different than we were at the beginning of the week, to be honest, which isn't a bad thing, right? This is if you've got an idea or trade idea that you've done your research on and you're watching, if it's in the same place as it was last week, no harm done. So so it's very, very sideways here. We had a squeeze building up here on the 0 line, and then we're still at 0. So nothing to do really but keep watching this one.
Yeah, sector as a whole kind of taking a beat, digesting some of those quick rally gains. Let's dive into an individual name within the energy sector. Taking a look at Valvoline, VVV, and see if on an individual basis if we were able to get a bit more of a breakout.
Yeah, I loved this chart on Monday, and the energy, we were just looking at XLE there and taking a bit of a pause. But again, remember that on the sector map, it's relatively outperforming still. So even though we were looking at those two charts just now saying, well, it's taking a bit of a pause, let's see what happens, it's still in a decent position relative to the other sectors. And so going into a security within a sector that's outperforming like that makes a lot of sense. And I love this chart on Monday. I love the way that it was really at that. It was testing this resistance and it was right at it. And look what we've done this week. We've really, again, there's sellers and buyers here, right? You can see it on the chart. We fell quickly back down here, rallied with some heavy volume and stayed in positive, clearly in positive territory. And now it looked like we ended the week just about above that line, fairly convincingly for the first time. So yeah, I still like the look of this one.
Absolutely. We want to buy things that are trending and outperforming. So look into those sector groups that on a relative basis are outperforming the broad index, and then finding those securities that are in strong trends. Just puts all the probabilities on your side. Thank you for that, Alex.
Yeah.
All right, so we understand what's happening with the macroeconomy, with the materials, and the energy sector. Let's switch gears and talk about what pain and suffering has been happening in the digital asset space. And did we find a bottom? Have we found support at those big round numbers? As Bitcoin flared back, let's dive in and take a look a little bit at the cryptocurrency space.
So much fun, right? This is
so much fun.
It's fun for us because it's kind of almost the game, right? Cryptocurrencies is almost the game. Like with the institutional guys you talk to, we're talking about sector bets, we're talking about macro, and it's kind of fun to dip into the cryptocurrency world. I mean, it wouldn't have been fun this week, but this week was okay. The week before, have we found a bottom? I think that it's clear that there are buyers and sellers within this range, right? We talked about these round numbers, 30,000. Just about 40,000, and you see this swinging up and down. I mean, 10% a day, even today, right down 8%, right in this range. We definitely will want to see, what happens as we get up to these levels and then down to these levels. If we fall down again, will we find support again as we did last time? Oscillator has, as it should have been, is below zero since it first broke. Came back up, rode the zero line. We got all these no-goes and, really screaming at us to be bearish at this point. And then we roll away from the oscillator. We still have time. We still have time to save some pain, even this time around, and cut down our drawdown if we're exposed to Bitcoin. And then now comes right back up to the zero line. Didn't, rode the one, I guess, here, not the zero, the negative one, but then rolled over again. So, it'll be swinging in between these levels, I think, until it decides which way it's going. And we'll wait and see. If it comes down here, find support. If it gets back up to this level, and the oscillator most likely will be testing the zero line if it does. And if it gets above zero, then we'll look to see if it can get above these levels in price. But we're not buyers of Bitcoin yet, right, Tyler? Not yet.
Not until it's in trend. That's where we want to own. And it's funny talking to folks who either they're old timers or they really know their history. Just hearkening back to the fact that this is the game, and in some ways, it's sort of the purest form of trading and technical analysis, in the way that there isn't a strong intrinsic value argument. We don't have investors that are looking at price to earnings on any of these coins. They are strictly being traded on price behavior, and technicals work really, really well. The other thing is that this is not the highly efficient, highly regulated U.S. equity markets where you've got circuit breakers that pause trading when when the pain is too high and things are dropping too fast. This was in free fall, and it was allowed to be. So, little word of caution to all those young Jesse Livermores out there. Make sure you know what side of the trend you are on, and hopefully these go-no-go charts will help you with that. Any closing thoughts, Alex, for this week? Any final chart you wanted to look at, or should we sign off and wish everybody a very happy Memorial Day?
Yeah, I think we're ready for the weekend.
You said it. Thanks, everybody, for listening. As always, you can find more information at gonogocharts.com. We'll be with you again next week. And for those of you who are interested, lots of free content, research, right on the site. And wish you a very happy Memorial Day weekend, and best of luck in all of your trading and investing. We'll see you soon.